What's going on, everyone? Welcome back to the next episode in the Aerial Effects Wealth Accumulation series, Part 1, Lesson 2. I hope you thoroughly enjoyed the first introductory video and are excited to follow this series through its entirety because, again, there's lots of value that we're going to be throwing out that can have a very long-lasting impact on your life and your family's lives into the future if you just simply pay attention and listen and extrapolate the information that's presented and kind of do some due diligence and apply it to your own financial circumstances. Okay, so this video is more or less going to be another preface video because I want to make sure we hit all the kind of macro details before we start diving into the micro. Okay, and it's going to be a relatively short video again, and I've kind of decided that that's how I want this series to be, simply because these days attention spans aren't that great. Okay, so I want to be relatively short and to the point so that I don't lose your attention, so that we're dialed in and really soaking in this information. Okay, and so I'm not doing a presenter view today. I apologize. This doesn't look quite as pretty, but for some reason, it's probably because there's an embedded screen recording option within PowerPoint, but I just prefer to use my screen recorder software. And for some reason, when I enter into presentation view, it likes to freeze the video or just messes with it, and I don't like splicing videos together. So anyway, that's just FYI, okay? But this video, we're going to be talking about working a job, okay? We're gonna really touch on this so we understand the mindset going into future videos talking about kind of an alternative perspective, a contrarian view to building wealth, okay? So working a job, and many of you probably do work a job, okay? And is that a bad thing? In my opinion, no, it's not. Okay, but here's why. I want to first ask you, why do people work jobs to begin with? If I asked you, let's say you are an avid chef, you love to cook, and I asked you, would you rather cook all day and make gourmet meals, or would you rather work your job? Okay, and if money weren't an aspect of the job, I can promise you you would rather be cooking and chefing it up than working your job. Okay, and so that begs the question, then why do you work your job instead of cooking all day? And the answer is obviously the only real reason people work is to make money and to put food on the table. Okay, so why work? Why spend 40 hours a week for 40 years of your life to then retire on 40% of the money you were making while living? And why work a job that you hate? If you look at recent statistics and just historical statistics, the vast majority of people hate their jobs. Okay, yet they continue to work the jobs because they're stuck in the cycle, they're stuck in the rat race because there's that fixed paycheck aspect tied to that job. Okay, so most people in this world would rather do the things they thoroughly enjoy over working a job. Okay, it's just plain and simple. But they rope you in with a paycheck. Okay, so is that a bad thing? If you're working a job right now, is it a bad thing? Well, like I said at the beginning, not necessarily. I don't think so. As long as you understand the mindset, and we're going to be helping you lay out that mindset throughout the series, but I want to preface it by saying, as long as your perspective on a job is that it is a temporary solution to a long-term problem of finding financial freedom and time freedom, then that is entirely okay for you to be working a job. Okay? as a temporary measure. Okay, but a lot of people, graduate from college and it's ingrained in them that a job is going to be part of their permanent life until they're age 65. More than likely have a couple comorbidities and can't do activities of daily living that you can at age 26, at age 35, when you're physically fit and more so able to enjoy many of life's wonders. Okay, so as long as you have that kind of perspective and that mindset, and you don't intend to, and you work actively to avoid the permanent cycle of working a job and working your way up, let's say a corporate ladder, then that is okay. Okay? But we really need to understand the psychology behind steady paychecks. You might at the outset say, "Oh, it is, this is temporary. It's okay. I don't want to work my whole life." And I understand that. But are you actively taking steps to avoid that? What are you doing to ensure that your goal of financial freedom and not working this job forever, that you're actually working towards that? Okay, because once you get roped into steady paychecks and raises and promotions, and you start to have, build a family and buy a house, it all of a sudden becomes a lot more difficult. Okay, so what I want you to understand is that most people who work a job, okay, first of all, live paycheck to paycheck, okay, and therefore are reliant on that job because it provides that steady paycheck every 2 weeks. Okay? And so what people do is they take the paycheck and immediately plunge that money into liabilities. Okay? They buy things that aren't going to pay them in the future, that are only going to take money out of their pockets in the future. Okay? And if you want to break out of that cycle, you have to take your paychecks and put them into assets that are going to put money into your pocket in the future, not take money out of your pocket. Okay? That is the only way to get out of that cycle. Is the only active approach that you can take to avoid getting trapped in the rat race. Okay? And so time and taxes are very critical components of working a job. Okay, there is an opportunity cost with working a job. Okay, if you're spending 8 hours, 10 hours, 12 hours a day working a job, then that's an opportunity cost, because that's 8 to 12 hours that you could have spent working on yourself and prioritizing yourself. Okay, and learning new skill sets that are going to put money in your pocket on your own accord. Okay, so you have to understand that working a job, even if it is temporary in your mindset, that there is still an opportunity cost, because you are taking your time and working on someone else's dream. You're working for somebody else's company. Someone else is the CEO. They're leveraging their time by hiring you to do the job that they don't want to do. Okay? And so I really want us to understand that there is that opportunity cost. And the longer that you're a part of that system, the harder it is to kind of get out of it if you're not actively working towards breaking free. Okay, so you're working on someone else's dream, more than likely. Okay, I want you to ask yourself, do you prioritize yourself, put yourself first, or do you put yourself on the back burner? And I'm not just talking financially, but there's multiple aspects: emotionally, intellectually, health, physically. Okay, do you put so much time into your job that you don't have time to prepare a healthy meal for yourself and feed your body the proper nutrients? Do you work so much on your job that you don't get the necessary sleep that your body needs in order to heal, or in order to be productive and be in a good mood the next day? Okay? Is the job overwhelming you in your life to the point that you can't work on yourself and your own goals? Okay, these are serious things to kind of reflect on and think about. Do you put the same effort into yourself as you do into your job? If not, why? Okay, why are you working harder for someone else than you are on your own life? Okay, it's your life. Okay, if you're working a job, put as much effort, if not more effort, into yourself and prioritize yourself and your health and your finances and your family over your job, because at the end of the day, it's your life and your life only. Okay? Now, another aspect of working a job. Do we understand that employees who make earned income, and your paycheck is earned income, you're trading your time for money, you're an employee, you make earned income and you pay the highest taxes. Okay, so not only are you trading the vast majority of your life, time-wise, trading that away, but you're also paying the most in taxes. You are punished the most because as an employee, you are not a producer, you are a consumer. Okay, the tax code is built in a specific manner that it incentivizes production and productivity. So we give tax breaks to people who are producers, CEOs, investors. They produce economic growth. They get the tax breaks, while you, mainly a consumer as an employee, aren't a very high producer. You're getting punished the most. You pay the highest in taxes. You get the fewest deductions. Okay? So, out of all the things that we've already talked about that would turn you off from a job, this certainly should. Okay? Most people, with money they make from their jobs, they will participate in qualified retirement plans. Okay? Like 401ks. They're set up IRAs. Or, pension plans, etc., that are tax deductible when you fund them. Okay, and so, it's so great. You get to, the employer matches my contribution, and I get to take an income tax deduction when I contribute to my 401k. Okay, well, great, but you have to understand the assumptions behind that. Okay, when you contribute to a 401k, and you deduct that off your income taxes for that year, you have to pay taxes on that later. Okay, and the assumption then is that, I would rather take the deduction now and pay the taxes later because later on I'm going to be in a lower income tax bracket. Okay, well, why do you plan on retiring poor? Why do you plan on retiring with less money than you have now, or less income than you have now? Okay? Not only that, all the distributions you take out of your 401k, once you finally hit that age limit when you're allowed to without paying a penalty, you pay ordinary income tax on all the distributions. So you don't get the lower capital gains rates, no. You pay ordinary income tax rates. And so, personally, if I were in that boat, well, I don't intend on retiring poor. I intend on retiring extremely wealthy, therefore being in a higher tax bracket. So why deduct the income now, deduct the income now and then pay taxes later on distributions at ordinary income rates when I intend to be in a higher bracket? So I hope you're following here. But there's just natural assumptions built into into those qualified plans that we have to understand. If you actually have a mindset of, I intend to be wealthy. I intend to have a great deal of cash flowing assets when I retire. Why then, as an employee now, with the understanding that I'm temporarily working a job, why would I contribute to the 401k plan? Okay. Or do I take that money and put it into assets now that are more productive, that you don't have to wait until you're 60, 65 to start taking distributions, that make a better return now, that cash flow you now? Okay. And that's where we're going to start getting into the nitty gritty here, coming up with our next video in asset acquisition, asset accumulation. Okay. Most people invest for net worth. Okay. Most people will work their whole lives and invest in a portfolio that's a nest egg by the time that they retire. Okay. And they take that money out of their paycheck, automatically put it into a 401k, take the income tax deduction, and hand it over to quote unquote professionals at Wall Street who manage the money for them. Okay, giving control over their finances and their wealth over to a bunch of morons on Wall Street who are only there to make money off of you. And more than likely, historically, will only get you 6, 7, 8% a year. Okay. Meanwhile, inflation is about 7%. So anyway, does passive income and asset income sound more appealing to you now over a job? And again, I'm not saying that a job is a terrible thing in the temporary. Okay. If you're using it properly, okay, and you have this mindset, and we're going to lay it out here throughout this course, it's very important that you're taking active steps every day to ensure that you don't get caught up in the rat race. Okay, always, always, always put yourself first, and always pay yourself first. And we talked about putting yourself first in terms of, getting the necessary sleep, getting the necessary exercise every day. Setting time aside to prepare clean, organic, whole foods, healthy meals that nourish your body, provide you energy and clarity of mind. Okay. Not only that, but paying yourself first. So, as an employee, designate a certain percentage off of the top of your paycheck. And this is how I want to kind of close out this video, is I want you to evaluate your financial situation. Okay, look at where you're at with your job right now, how much you're making, what your assets and liabilities are. See if you can restructure those assets and liabilities, but also look over at your income statement. And I want you to designate a fixed percentage off the top of every paycheck that you can pour straight into assets. Okay, most people will take a paycheck, they'll purchase liabilities first, and whatever's left over, maybe I'll throw that into assets. Okay, and I want it to be reverse. Okay, I want you to take a fixed percentage, whether that be starting off slow and small at 10%, up to 50% of your income. Okay, off the top, that goes into assets, and we'll get into the asset column later in asset acquisition. But I want you to think about this and designate a percent for yourself. Okay, that you're going to pay yourself first, that you're going to put money into assets that are going to put money into your pocket, that are going to cash flow you, that are going to pay the bills later. Okay, we're investing for cash flow, not net worth. We're not working our whole lives to build a net worth that we can retire on and pay ordinary income taxes on at lower brackets. No, we're not going to be poor at 65. Okay? We're going to be in high tax brackets. We're going to be wealthy. We're going to have cash flowing assets that pay the bills every single month. That's the ultimate goal. Okay? So we need to take money off the top, put it into assets, and the rest into liabilities. Okay? Put yourself first, put your creditors last. Okay, and if there's not enough to pay your creditors, what's that going to do? That's going to only drive you harder to make more money. Okay, because you're paying yourself and you're putting yourself first. All right, so I hope this was somewhat powerful for you. And again, just another preface video before we get into the in-depth nitty-gritty. What do you do with your Forex earnings? How do you structure your assets? Setting up LLCs and providing that liability protection and being able to take advantage of the tax brackets as a producer, not a consumer. And so many other aspects of building wealth and building cash flow and building your asset column. And it's going to be very powerful. So I hope you enjoyed this video. We'll see you next week, and we'll be talking about asset accumulation and acquisition and positioning ourselves to take control of our financial future. At the end of the day, it's all about control that we retain and don't hand over to somebody else. Okay? So take steps today to start taking control of your financial future.